All right, welcome back into Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. Thank you very much for tuning us in. Lots going on today. It's the last day of the week. It's going to be what the technicians love to look at some of these prices as we go into the close. But let's update you on where we're at right now. Let's talk about corn. Let's take a look at that big board behind me. Let's put it up there and see what it looks like. Well, it's a little bit better today, but not very much. This is really just kind of laying there. We're a half cent better in March to 6.76.5. We've got May up, 1 cent to 6.76 even. And the most important one is the one that won't move, and that's DC corn. It just seems to be rooted to 5.95. Right now, it's at 5.94 1/4, and that's up 3/4 cent. So not a lot happening there. Every now and again, you got to slap the side of your monitor to make sure that it's working, because those prices just aren't moving. How about soybeans? This is suffering a little bit of that same fate. The front month March, that's up 1/4 cent to 15.26 3/4, while May, right behind it, it's up 3/4 cents to 15.22. Let's go out to the new crop, though. This is what you'd be hedging your crop into, Novia 23. Making a run towards that $14 level, 13.85 even is last. It's up 1 1/4 cents, but not very much on the day. And like I said last time, and maybe our next guest analyst will debate it with me, but what will touch, will corn touch $6 before beans touch 14 when it comes to the new crop? That'll be an interesting conversation. Let's see. They might, how about this? Neither one of them will touch either. Wow, that's what it's been like lately. How about wheat in Chicago? Up 2 cents in that March contract, 7.67 even as last. May's up a penny to 7.77 3/4. That one's quiet. Let's take a look at the hard red wheat in Kansas City. The HRW down there. There you go. Something decent. 8 1/4 cents higher in March. 9.06 3/4 is last. We've got a 9 in front of that one. 8 1/4 cents higher in the May to 8.95 1/2. Moving over to the Minneapolis spring wheat. That one's just real quiet. March up just 1 tick. 9.30 1/2 is last there. May sharply unchanged at 9.23 3/4. And then finally, we've got cotton. Let's take a look at that. That's been trading weak all day. Bounced off at 80 even. We're down 80.46. That's down 79 points from yesterday's close. Let's bring in our next guest analyst. That's going to be Todd Horowitz. He's with Bubba Trading, coming to us live from, I think he's in Vegas. There he is. Yeah, he's right in front of the Renoir and the Monet. That's where he spends all of that extra money. All right, Todd. I just rattled off those prices. Anything jump out at you? Anything stick out? Anything interesting at all?
There's nothing going on. That's what's jumping out, right? Grains are trading on both sides of unchanged. How about that corn and beans will hit 6 and 14 together?
Oh,
they will
okay.
go like on a date, and they will get there together. Certainly everything looks fine. You look at the chart, you look at the technicals, they look terrific. We just can't seem to get any real momentum behind it. But of course, markets in general don't have any real momentum in movement. So we're kind of in this frozen zone of waiting for time. And I can't believe we're waiting for news, but maybe we're going to wait for news. I don't know. There's really a lack of volume. There's a lack of excitement. There's a lack of people participating. And if you take a look at cotton, what you talk about all the time, cotton's been straight sideways for 6 months now.
Well, and it looks as though, obviously, I say this tongue in cheek, but these moving averages start laying on top of each other after we go sideways for a long enough period of time, number one. And number two, could you make a case that we're getting ready to coil up and make a move either higher or lower?
I could make that case, of course, and I do think it is higher. I think when you look at it, if you look at all markets combined, equities have been coiling, and it looks like they want to break to the downside. And that would be a benefit to the grain markets. If equities break to the downside, that money's going to be looking for a place to go. And you know that commodities, especially the grains, are one of the number one funds where money likes to run into. And I think a short squeeze will infuse this market when it really starts to go, because a lot of people have been trying to keep pressure on trying to buy at cheaper prices. And I think once you get through that, and once we can break them out, I think then they can really take off.
All right. Well, hold that thought. A lot of guys like to hear that. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Bubba Horowitz. He's in Las Vegas. We'll be right back after this. All right. Welcome back to Market Day Report. Got the live cattle behind my big head. Let's take a look at what that big board says. We got that Feb contract now. Let's go April. April's up 82 cents to 164.90. We got June up 57 cents to 160.30. So steady, a little bit better. Not a bad board. We'll take it on a day like this for sure. How about feeders? Well, we've got March and April are higher. March is up 65 cents very quietly to 186.87, and April's up 20 cents to 190.80. But as you go out the deferreds, we start to lose real estate. In September, way out there, 22 cents lower to 210.50. There you go. That'll give you an idea of the shape of that curve. How about lean hogs? Well, that's pretty similar. We got a little bit of a rally in, well, not really. April's up a nickel, 85.82. We've got May up 52 cents, but as you go out the deferreds, you start to lose them. So May's trading 95.37, and then out in August, you're off 15 cents to 104.75. Just to give you an idea about the shape of that one, too. So let's bring back in our expert analyst. It's going to be Todd Horowitz. He's been patiently waiting in the wings. All right, Todd, what are your thoughts here?
Well, Scott, as we've talked about, the meats have a lot to do with what's going on in crude oil, and hogs were higher this morning when the crude was rallying, and now they're back to basically unchanged. And the feeders and fats just continue to kind of drift higher. I mean, fats continue to make new high after new high. I mean, they're now less than 10% from all-time highs. I don't know if they'll get there or not, but I don't think they're going lower. I just think this is going to be a constant drift, and it'll be all budgetary issues, to the individual consumer. And right now, with crude oil a little bit lower, budgets are a little better. We can buy steak versus pork, and I think that's really as simple as that.
I mean, everybody knows that we're going to have a shortage, and everybody knows that it's like the worst. Is it going to be that easy to stay long cattle all summer long? Are there going to be times where they're going to try to shake you out?
Well, I think they're going to shake you up pretty good. If I were to predict, I would think that Saudi Arabia is going to somehow come up with a shortage of oil right during driving season, probably end of April, early May, and suddenly our prices will be skyrocketing higher, which will not be good for the cattle prices, and it'll be much better for hogs going into grilling season.
All right, that's good stuff. I like it when you bring other stuff in like crude oil. That's good, pertinent information. Appreciate you coming on, Todd. Have a great weekend out there in Vegas. We're going to bring this one back home to Nashville.